Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition. And our focus is on the Q3 earnings. The company on our radar today is UFlex that's come out with its Q3 numbers. And to discuss insights on the quarterly earnings, I have with me the top management of the company joining in. Rajesh, Bhatia, the Group President for Finance and Accounts, and the CFO of the company UFlex joins right in. Good afternoon, sir. Good to have you with us on Business Today Television. Could you detail for us some of the key highlights of the earnings that has of the quarter that's just gone by for all our viewers this time around?
Sure. I think I'll start with the upsides. The total volume that we witnessed this quarter is up about close to about 6% on a year-on-year basis.
Okay.
Our packaging films, which has been languishing for some time, we've seen about a 6.5% growth volume in this quarter versus the same period last year. And liquid packaging, we've seen about 8.5% volume growth in this quarter versus the last year, and about 12.7% value growth in the aseptic packaging business also. Overall, if we look at the operational levels, I think at an operational level, the EBITDA is at about 12.7%, which is better than 12.2% what we had in the same period last year. So there has been a slight improvement in the EBITDA margin this quarter versus driven by the higher volume numbers I just spoke about. We've also hit in this quarter by one-off, currency loss in Nigeria. We've seen that in the June quarter also there was a substantial. So the Nigerian economy after the new government came in has moved on to a new window for the forex, whereby they are no longer controlling the exchange, and because of the country's inherent issues with the FX. The devaluation happened substantially in the June quarter, and we've seen another round of devaluation in the current quarter. Overall, for the quarter, largely because of Nigeria, we've seen a impact of about 158 crores on account of the currency translation losses at a consolidated level, which brought the EBITDA down to minus 67 crores. On a positive side, the Nigerian operations, the volumes improved by about 60% compared to the same period last year. The America markets have come back very strongly. We've had overall about 100% growth in the volumes from our Mexican plant. The Europe still continues to be an area of concern, and the consumer sentiment remains a bit tepid still over there. Though the positive is that from 1st of January now, we are looking at a much reduced cost of energy for our European operations, which should help augment margins. And on a standalone basis in India, we had healthy growth in exports of close to about 13%. Also, the Red Sea crisis, which we started witnessing from end of November, I think that is bringing back in focus that the consumers are looking to now source locally. That has increased the freight cost for the companies which are exporting to the markets, and that should augur well, in the quarters to come on the margins as well as on the improved offtake in the European market. So in nutshell, a quarter where I would say that it's a consolidation phase. We maintained our margins, slightly improved our margins, improved our volumes, and yet on the we were hit by a currency devaluation loss of about 158 crore on an overall basis during the quarter.
Fair enough, sir. And thanks a lot for setting that entire context for all our viewers to really understand on the back of which the earnings have come about. On the volume as well as on the margins front, sir, what can be the outlook that you can share with us in the coming 1 or 2 quarters?
I think the Red Sea crisis should help us improve the margins in the European markets. The higher volumes that we've seen in the current quarter in the Americas market should also culminate into higher margins in the quarters to come. But strict still and aseptic packaging in the current quarter as well as in the next quarter. Normally there's a seasonal period, so the we'll see definitely a volume growth happening there as well. The flexible packaging, including the holographic business, has been doing well in the last in this current financial year, and we expect steady margins from that business. Still, on a conservative basis, we'll say that if we are anywhere between 12.5 to 13% margin range, we'll keep that
Okay.
as a guidance
Okay.
as the things are, I mean, sort of unfolding on the Red Sea crisis and the European demand. I think we'll have a more solid guidance after the next 2 quarters.
Okay, so that's as far as the margin outlook is concerned. 12.5 to 13% is what you're looking at, and of course, a watch list will be on the Red Sea crisis going forward from here also. Sir, as far as the domestic demand is concerned, how do you see that really panning out, rural versus urban? What are the trends that you're picking at?
So I think domestic demand, both for the flexible packaging, holographic, and aseptic packaging, continues to be, quite strong. We even the domestic margins are better at we reported about 12 and 10.5% margins for our domestic business. So that business, because the packaging films business today, there are hardly any margins. So, but still, we've been able to maintain our margins, what we achieved a year before and now, largely because the other two subsets of the business, which is packaging subset, which includes our aseptic packaging, flexible packaging, holographic business, they are, sort of doing pretty well. And we expect that those business will continue to do well, especially the aseptic packaging, where every quarter we are seeing, better volume and value growth coming our way.
Okay. So soon we will also be entering FY25 as well. Could you give us a sense of what is your own internal thought or your own guidance that you may have set or targets that you may have set in terms of top line, bottom line? And do you really see FY25 panning out better for you, the challenges ebbing when it comes to the financials at this point?
Definitely. I think FY25 should be better as compared to FY24, largely because, the major market, Americas, we're seeing a much better volume traction in that market. We now, as I said, that even Nigeria on a year-on-year basis, we witness about 60% volume growth. So that market is also helping us because they have also imposed an additional duty to give a protection to the local manufacturing, and that should also help our way. Uh, uh, Aseptic packaging, that we are currently implementing an expansion of the capacity through debottlenecking, which will come into operations in by end of December.
Hmm.
And that should give us more volumes in part of the year in FY25.
Mm-hmm.
But subsequent years, we can look at much higher volumes coming from that business. Our backward integration in India for the packaging PET resin at Panipat is already at a trial run level. We'll see commissioning happening by the end of this fiscal. And next middle of next fiscal, we'll also see the our similar plant in Egypt coming into operation. So which should give us a better quality raw material as well as a more handle on our costs with respect to the raw materials. And overall, I feel that the margins in the packaging films business in India should also be better in FY25 as the demand supply mismatch is taken care of by growth, organic growth in the market. We're looking at about 10 to 11% growth in that market. And also, the company is behaving more rationally in that particular segment. So overall, I think FY25 should be much better year as compared to FY24.
Okay, fair enough. Well, thanks a lot, Mr. Bhatia, for being with us on the show and explaining to all our viewers the earnings insights and the outlook also going forward. All the very best to you for the upcoming quarters, and here's hoping for more interactions going forward as well. Many thanks.
Thank you. Thank you.
All right, with that, we wrap up this special conversation with UFlex top management. Right now, the earnings were impacted by one-offs as well, exceptional items, and of course, the currency, impact that they have seen from Nigeria. That has been a clear impact. Going forward, there could be a Red Sea crisis that could be under watch list, but at this point in time, the company is betting big on America market returning with 100% growth in volume, so that should continue going forward. And of course, betting big on the expansion plans that they are doing with the additions of the capacity that could give them a further, lever for growth going forward from here too. With that, we wrap up this special conversation, but do stay tuned. A lot of action follows up next on your screens, even going forward.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome. You're watching BT I'm Tanya Neja. Well, it's the earnings season and the company on our radar today is JB Pharma. Well, the company reported a set of numbers